Hi, this is TJ with the Backpack Trader. I've been recently updating our Forex alert service, bringing the signals up to date, the trade plans that we use, and I use my UTA spreadsheet, the Ultimate Trade Analyzer spreadsheet. It's a pre-programmed spreadsheet. It's what I believe to be one of the most powerful trading tools one could use to be successful. It helps you build trade plans. It helps you with your trade psychology because you start to learn and realize what it takes to succeed as a trader. It's not whether a trade wins or loses. It's whether the trade plan itself wins and lifts your equity to higher and higher levels. Our Spotlight FX alert service just broke out above 35,000 pips. 35,000 pips in less than 3 years. That's phenomenal. Just a month or so ago, I was like, looks like we're going to get to 25,000 pips. We're up 10,000 pips since then. It's incredible because the markets move when they move. And if I'm worried about whether a trade wins or loses, that doesn't get me anywhere. If a trade wins, great, but I still have to take another trade because I'm a trader. If a trade loses, I still have to take another trade, don't I? You don't make money off a trade winning or losing. You make money off the trade plan itself, winning more than it loses and lifting your account. And then you use power of compounding, Einstein's seventh wonder of the world. As your account grows, you give yourself a raise, you move your finger from the 1 to the 2, and you increase your position size. And we stick to a very smart risk to capital ratio. Typically, we're going to risk around 2% of our trading account on the next trade that's part of a proven trade plan. That's the key. What I just told you now is the holy grail to successful trading. It really is. If you don't learn anything else, this is what you should take away from this video. But I'm going to go a little further now. I want to show you how powerful this concept is and why money management, how you apply your risk allocation to a trade plan that you can prove will win if you just trade it and put the proper risk on it, what that could do for you. It's life-changing. And the UTA spreadsheet teaches us that, teaches us how to do it, and basically takes us from being the guy or gal who wants to trade and turns us into the CEO of our trading business. That's always been our message here at the Backpack Trader. Because in the end, we want our trading to work for us, do the heavy lifting, and only take us a few minutes a day, a week, whatever. Because I don't want to be staring at my charts all the time. I want to have my trades doing my work for me, my trade plan doing the work for me so I can go off and live my life the way I want. That's the Backpack Trader way to give yourself freedom. Trading's too darn important to get wrong, so let's get it right. And let's jump right into this video. All right, this is one of my UTA spreadsheets. This is a spreadsheet of the pound-yen daily chart. And it's the same trade plan that we use in our Forex alert service. It's got several years back of back testing, and then the current date when we started the service, and then all the trades going forward. Now, these trades are not precisely the same as what we call in the service because Forex is the wild, wild west. Data feeds change. They're not the same. And some trades we adjusted and did differently. This spreadsheet is the pure Counterpunch Trader trade plan. So I wanted to show you the beginning stages because each trade is put in as 4 different positions because I'm tracking 3 exits, target 1, target 2, target 3, and the trailer. And I put them in as 4 independent trades, but all 4 of these represent 1 trade. All right, so it's just a strange way that I do it, but it gives me a lot of valuable information. There's a reason why I do it this way. Also, I set it up as a mini lot, $1 per pip, even though the pound yen is not $1 per pip. It's always fluctuating, and you really need to get the current price of the pip versus the dollar, and it's always changing. So don't get caught up on the dollar value. What's more important is the amount of pips, the profit factor, that sort of thing, okay? So we'll just say every pip is $1, but we know that sometimes it'll be less, sometimes it might even be more, and that's kind of a moot point. The important thing is you develop a win-loss column and you put in trades that win and lose and win and lose and win and win and lose and win, etc., and you start to understand there's a random distribution of wins and losses that we cannot control. But what we can control is that we learn after putting enough trades in whether the odds are on our side or not. And one quick and easy way to see that, and I'm just going to go down to the last trade. You can see there's like 709 line items all the way to April 7th, 2022. And a quick at-a-glance view is the performance tab here. And you can see, well, that looks pretty good because it keeps going up and up and up. Not all trades win. There's no straight line to trader nirvana, but this is the next best thing. Because if you could start here and know that you can get to here a few years later, and this is without power of compounding, just keeping that dollar per pip, that helps you psychologically stay with the trade plan, doesn't it? So the first thing I want to do is look at the last trade, because the current trade exited at target 1, and since I did this spreadsheet, this trade is now finished. So let's just go ahead and quickly enter in this trade to get it up to date, and I'm going to push this aside. All right, so this is the trade. You could see that the exit was at 164.70, target 1. You could see it hit target 2, target 3, and it trailed out here. So we're going to put in targets 2 and 3. So target 2, 165.91, 165.91. And by the way, this is the Counterpunch Trader. Could be done with the Counterpunch Express 2 as well. Target 3 is 167.12. And then the trailer, let's click on that, is 164.84. 164.84. All right, and we're still in April. We may get another trade, so I'm not going to close out the month yet. When you close out the month, it'll tally it up for you, and you get these nice monthly totals. You could also click on the show stats, and now it gives you, really great information. You could see it's winning almost 69%. That's great. Anytime you can do better than 2/3, 1/3, and this is bordering on 70%. It's posted over 40,000 pips, just this one pair. It's got a profit factor of 2.59. These are all great numbers. All right. So you could also see that the monthly win rate is 75%. So it's winning 3 out of 4 months. There's other things we could look at too. I don't want to get caught up with a lot of this minutia. What I want to do now is get to the hidden power of this UTA spreadsheet and what it could really teach us. But first I have to set it up. All right, so one thing I'm going to do is I'm going to make this a micro lot. Instead of $1 a pip, we're going to make it 10 cents a pip. And we're going to say that we can trade this up to 20 full-size lots per position. So we're going to put in 2,000. Okay, because if we move the decimal point over mini full-size, it'd be 20 full-size lots times the 4 positions, right? I don't know if it's going to grow to that. And we're going to say that our starting capital is $10,000. Okay, we may have to change this, but let's say we're starting at $10,000. Now we're probably going to risk more than 10 cents a pip or trade more than a micro lot, but wait until you see what I show you on this, okay? We also have to say what the average losing trade would be, and in this case, since we changed it, the average losing trade is $18.83 at 10 cents a pip, okay? Because these are big trades. And then we're going to put on 0.5% of our risk on each of the 4 positions. So it's going to end up being 2% when you count it on all 4. Because the UTA spreadsheet will look at each line item as a complete trade, even though we know that our complete trade is 4 line items. So we have to work within the limitations of the tool, but we're going to put a risk factor on here of 0.005. So that's 0.5% per position. 0.5%. Okay, this will make sense in a moment. What we're going to do is we're going to run a tool that's going to look at all the trades in the spreadsheet starting with a $10,000 account, risking 0.5% on each of the 4 positions, right? 2% total. And it's going to apply that to the risk factor of the average losing trade. Okay, so that's about 188 pips as the average losing trade. And then it's going to show us what our account would have grown to if it increases its position using the fixed fractional money management strategy. And that's what this formula is. That's what we're just setting up. And it'll allow it to trade as large as 2,000 micro lots per position, which is 20 full-size lots per position. If it can get there, right? This is not a lot of data. It's only like, 6 years or so. Right here, you could see what your account would have grown to from $10,000 to $14,000 without any money management at a micro lot, 1 micro lot per position. So it's going to be 4 micro lots per the 4 positions, right? 40 cents a pip in this case. It would have grown quite a bit for trading peanuts. But what would have it grown to if it applied the 2% risk, or the 0.5% times 4, and let it grow, or, drawdowns? It would take positions off. As you grow your equity, it puts positions on. You understand what I'm saying? Let's see what would have happened. This is where you really learn how to make trading work for you and become your best version of the backpack trader. So I'm just going to hit yes. I'm going to let this run for a moment. You'll see what happens here in a second. It's still running. It's crunching a ton of numbers. You could see here's our date range. Here's our starting capital. Here's our risk per position. And you can see there's that $14,000 that the account would have grown to if you were only trading a micro lot. Well, if you would have increased your position as your account grew, it would have grown up to 6 micro lots. And instead of making $14,000, you would have made $25,000. So that may not seem like a lot of money, but you're talking about micro lots, right? So that's pretty powerful because it's a big difference. And that's what money management can do for you. And there's a very interesting piece of information here that escapes most people's notice. The percent of trades that are in drawdown, 57%. Now that's more than half, but that is an amazing number. That's like one of the best numbers I've ever seen. Why is that amazing? If you're in drawdown more than half the time, why is that amazing? Well, because think of 10 trades, 5.7 trades, you're in drawdown, right? 57, we'll call it 5.7 trades. Well, what about 4.3 trades? You're making new equity highs. So let's just say for every 6 trades, you're in drawdown, but every 4 trades, you're making a new equity high with every 10 trades. More than 40% of the time, you're making new equity highs. That's amazing. And we see that here because you can see the growth going up is far bigger than the drawdowns going down, you see? So you get the visualization also. All right, so what we're going to do now, we've doubled our capital from 10,000 to 20,000. And because it's winning so much, with the 2.59 profit factor and nearly 69%, we can justify risking 3% of our account instead of 2%. Let's just see what would have happened. So by making it 0.75% per position, if you multiply that by 4, it ends up being 3% instead of the 2%. And we've doubled our capital from 10,000 to 20,000. Let's see what our account would have grown to. I was going through some serious number crunching here. Here it comes. Wow, look at that. We added 1% to our risk factor times the 4 positions, and we started with $20,000 instead of $10,000, and our $20,000 would have grown to $93,000 with the identical trades, and it would have traded up to 36 micros, which is the same as 3.6 minis, and it hasn't even grown to a full-size lot yet. And remember, we put 20 lots as a cap. So there's a lot of room for this to grow. You can imagine what this is going to grow to 2 or 3 years into the future because you hit the exponential curve. What do I mean by exponential curve? Well, this graph shows you on the left, starting with $20,000 with a micro lot on every trade. It went up pretty good. You have to look at the left side. It went up to about 24,000, like it said. The one on the right, the green, is the axis on the right, and it started at the same 20,000 here, but it grew up to 93,000. And you can see the exponential curve is beginning to kick in. So when it does kick in, this shoots up like a rocket ship because that's what the power of compounding is. Einstein's eighth wonder of the world, right? So let's look at it when we see the position size coming on and off. This is what I refer to as the ramp because it ramps up. These are position sizes coming on and off throughout all the trades. And you could see that it's starting to accelerate. When you hit that apex and that exponential curve, your airplane that's gaining an altitude tips its nose up so fast that it turns into a rocket ship and shoots up all the way until you hit your maximum size. And so you're going to make most of your money in the final 5 to 10% of the curve on the right when you hit that exponential curve. This is just beginning to hit the exponential curve. Okay, so you have to kind of imagine that. That's the power of this tool. And that's why I tell traders, take the time to go through your trade plan and put in the trades. It's time consuming, yes. We have ways to economize your time, starting with my 3-step sniff test, fast testing a bunch of trade plans first to qualify or pre-qualify whether it's worth your time, then putting it into the UTA spreadsheet. But once you do put it in the spreadsheet, you learn to live with the win-loss column. You learn how to deal with the random distribution of wins and losses, and you rise above the forest instead of being in the trees. Think of each trade as a tree, right? And some trees fall, and it's okay to sacrifice a third of the trees in your forest. Look at these 3 losers in a row, for example. It lost 2,600 pips that month. It's okay to sacrifice some sick trees if it means you can grow your forest larger and larger as a result. This is your forest. You want to live above the forest. You don't want to be a little grunt running around the trees without any perception of the forest. That's how traders lose money. Stop being the person trying to trade and take ownership of your trading. Become your own best version of the backpack trader. Become the CEO of your trading business. The backpack trader shows us how to spend as little time as possible once we have our trade plan. This trade that I just entered in at the end there, that I showed you, this last trade, this took about 2 or 3 minutes in total to place it, manage it, finish it, done. Made 1,253 pips. Just this one trade, it took minutes. That's the backpack trader way. Trading minutes and turning your money into big time bucks for yourself. Now imagine having 6 or 7 or 8 more trade plans like this that only take a few minutes and that can grow your account like this using the power of compounding with a proven trade plan. That's what my Spotlight FX alert service is doing. We just broke 35,000 pips. 35,000 pips in less than 3 years. Now, this, of course, is a 6-year spreadsheet, but the last 3 years, we've done 35,000 pips, a combination of all the pairs that we send out for the alert service. You don't have to do this work. We've done it for you. You just take the trades. If you're interested, send me an email or click the link below, and you can find out more about it. If you want to learn about this UTA spreadsheet, you could also send me an email, troy@backpacktrader.com. And I do provide this spreadsheet with all the memberships that I offer for all the strategies that I teach: Counterpunch Trader, Spotlight Master Suite, and Catapult Trader. and I teach you how to use the UTA spreadsheet. In fact, you can see all the training videos right here on this YouTube channel, and I hope you watch them. Finally, don't forget to join our Trade Hacking Club. It's a free trader community. It's growing by leaps and bounds. We have very talented traders on there. You can learn a lot from them. It's free. It's on our Discord channel. And if you get on board our Spotlight FX alerts, you can have your alerts and your Trade Hacking Club all in one nice little contained window on Discord. And it's really great. So I hope that you take me up on this and join our free Trade Hacking Club. Consider the Spotlight FX alerts, because it's awesome and it keeps winning. And I just showed you how you can use the power of compounding and trade yourself into your own best version of the backpack trader, which ultimately means freedom for you and your family to live the life you've always imagined for yourself. Hope you enjoyed this video, everybody. This is TJ, Backpack Trader. I'll see you on the next one.